Hello, good morning from whichever side of the world or the country you're watching me from. My name is Ian Joseph, lead market analyst, HFM East Africa. Now, quick disclaimer before we do begin. The information herein is only meant for educational and informative purposes. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but do not worry, I'm here to take you through the markets bit by bit. Now, I want to start off by congratulating you, the traders, whereby one of you just walked home, technically drove home with the brand new Mercedes that we just gave away yesterday, 10 iPhone 16s, and 5 trading stations. If you weren't part of it, don't worry, we also have other competitions currently at the moment, starting off with the fast five, whereby you do have a chance to get home with 325,000 Kenyan shillings. Now, the competition is time limited, whereby it only has 15 days, 13 hours, and counting for you to win. It's not a marathon, it is a sprint. Speed is everything. The fast to trade is the first to win. Now, the grand prize, the first five people are going to take home 65,000 Kenyan shillings each, and they way to join, it's very easy. Go to your HFM portal, website, or application. Go to promotions, the first five, and join the promotion. You need to get at least 150 lot size in Forex, gold, or silver, or crypto using any other trading account. Be among the first five traders to complete the trading requirements. And by 19th September, we are going to have the giveaway. Also, not only this, we do have, this is going to be round one, okay? We do also have other competitions, especially if you are in Kenya. You just go over to tools and education. Currently at the moment it's going to be promotion, sorry, whereby you head over to promotions. We do have the battle of the elite and the first five. Now this one is also applicable to you, whereby battle of the elite, become Kenya's Don Wabiz, claim the crown. This is a chance for you to win 650,000 Kenyan shillings. It's going to be taking place for the next 1 month. We are going to have 13 winners, two prize tiers, leverage as usual, 1:400. Now, the first person is going to take home $5,000, which is equivalent to 650,000 Kenyan shillings. The second winner is going to take home 260,000 pesa taslim, or equivalent to $2,000. And then the third winner is going to take home 130,000 Kenyan shillings. We are going to have lucky draws whereby 10 winners are going to walk home with at least 26,000 Kenyan shillings. That's good money. Whereby, how to join? Once again, very simple. Go over to your HF using the website or the application. Go over to promotions, battle of the elite, open a battle of the elite trading account, and deposit at least 100 United States dollars, or equivalent to 13,000 Kenyan shillings. Step number 3 is trade any asset and rank in the top 3 traders by percentage of profit gain to win a cash prize. Once again, we are going to have a lucky draw for 10 winners, whereby you are going to walk home with at least $200 each. Once again, currently at the moment, we do have the leaderboard. We have George up 303%. Quite interesting. You still have a low. If you can start right now, you have a very big shot at winning, because looking at positionings from number 2 to number 5, you can be on the leaderboard. You have to believe in yourself. Now, that aside, let's get over to the morning market call. Once again, my name is Ian Joseph, lead market analyst at HFM East Africa. Now, kindly share the screen. Uh, tell people to join. Money is there. Colleagues, don't worry, money will come. Let me show you how it will come. Now, starting over with the economic calendar, where we do begin everything of ours. We did have Australian dollar releasing their trade balance today at exactly 4:30 a.m. local East African time. Now, this was quite interesting because, as you can see with the folder here, we do have a red folder, meaning high volatility anticipated. Now, trade balance is very important because it's going to look at how a country, let's say, for example, their ratios of their exports and imports. Okay. Now, if a country is exporting more than they're importing, it means that in this particular case, we are looking at the Australian dollar. Now, we were looking at a previous number of 5.3 billion. Now, this is Australian dollars. We were having a consensus of 4.9 billion. The data actually came out better than anticipated at 7.3 billion. Now, this shows us that, okay, Australia are exporting more than they're importing. Now, let's say, for example, they're exporting, they do have a lot of resources, okay? These resources have to be sold in terms of Australian dollars, okay? So that means a lot of Australian dollars will be in circulation as a result of the net exports compared to imports. Now, this is seen as positive because if a steady demand in exchange for Australian exports is seen, that will in turn put it in a positive growth in terms of trade balance, and that should be positive for the Australian dollar. Now, there is a document that was released. If you click on the read official report, this is the exact same document that was released at exactly 4:30 a.m. today, local East African time, Nairobi time to be particular. Now, the key statistics at the moment, the seasonally adjusted balance on goods did increase by 1.9 billion in July. Goods credits, which are exports, increased by 1.4, which is 3.3%, driven by non-rural goods. Now, goods debit, which are imports, they did decrease by 490 million Australian dollars, which is equivalent to 1.3%, driven by non-monetary gold. Remember, once again, the Australian region has a lot of reserves. Looking at iron ore, if you look at metals like gold, they do have a lot of resources. Now, if they are exporting more than they are importing, once again, you do anticipate this to have a positive impact on the Australian dollar. And if you're looking at the charts, it means you might anticipate a stronger Australian dollar in result. Now, looking at the balance on goods, this is the graph. Looking at ever since 2021, the graphs have been declining, but looking at the seasonally adjusted, now there is two information here. Now we do have the seasonally adjusted, which is going to be the blue line, and then we do have the trend. Looking at the trend currently at the moment, ever since the lows that were created earlier this year on February, we are picking up, and this is what you'll want to see in an economy whereby you are better right now compared to where you've just come from. Now, looking at Australia, we have been looking at several data coming out this week, and tourism is picking up. We did see healthcare, pharmaceuticals do better compared to 1 year ago, and this is what you'll want to see in terms of fundamentals, whereby as a trader you ask yourself, will this information help me look for long opportunities or short opportunities on that currency pair? Remember, once again, our fundamentals will tell you where price is and where price should be, and it's not going to tell you how you'll reach there. So you need to have a perfect balance of how you're going to be bridging the gap between this data and switching over to your charts and looking for opportunities. Now, tomorrow is NFP. For those who will be around Nairobi, we shall be at the Nairobi garage, which is Spring Valley, just around the corner, whereby we are going to discuss about non-farm payroll, which is due to be released tomorrow. Purpose to attend. Once again, we are going to give out a few goodies. You know us, the best broker in the world currently at the moment. Now, looking at the data whereby goods credits, these were exports. You can see exports have been picking up ever since, once again, September 2024, whereby we have been seeing the trend rise steadily to the upper side, coming from lows. This was after the pandemic on September of 2021. Now, this is what you would want to see once again in an economy. Looking at imports have been rising to the upper side, but looking at the exports, the net exports are higher than the net imports, meaning the economy is exporting more than it is importing. Once again, very important data to be looking at. The economic calendar is going to be your favorite friend whenever charts. In terms of preparing yourself for the day, what do you anticipate? Now, that happened at 4:30 a.m. in the morning. At 9:30, we did receive a consumer price index for the Swiss franc. Now, if I do click on this data, you can see once again this was high volatility anticipated, and we shall look into the charts what this means. Now, the previous number was 0.2%. The consensus was 0.2%. The actual data did come out at 0.2%. Now, we do have two releases. Whenever you're looking at consumer price index, we do have the core and the data itself. Okay, now we are going to look at both of them and what do they mean. But looking at the CPI numbers itself, we did see inflation go down in Switzerland. And looking at the document, this was the official document that was released at exactly 9:30, but this was 8:30 their local time. Okay, you can see the information is not allowed to be released up until that particular point in time. Now the CPI numbers did fall by 0.1% in August 2025 compared with the previous month, reaching a level of 107.7 points from December 2020, which was at 100. Inflation was up 0.2% compared with the same month of the previous year. These are the results of the Federal Statistic Office. These are the people in charge of releasing these documents to us. Now, the 0.1% decrease compared with the previous month is due to several factors, including lower prices for international package holidays, supplementary accommodation, and air transport. Once again, Switzerland has a lot of beautiful places. And when you look at an economy, tourism usually brings a lot of money into the country, whereby you're going to get people from various places. And whenever tourists do travel, they usually do carry a lot of money with them. Now, this money are going to be used in terms of air transport, accommodation, package holidays. If you look at Kenya, for example, during there is usually a peak in tourism when there is the migration of the wildebeest around. It's just concluded. Actually, I do believe it's still ongoing, and usually we see an uptick in the amount of money that is coming into the country currently at the moment. Now, the hire of private means of transport also recorded a price decrease. In contrast, housing rentals and prices for clothing and footwear did increase. Now, once again, Switzerland do produce a lot of sweet goods. Now, looking at the data, this looks at consumers. Now, consumers account for a majority of overall inflation, whereby if consumers are spending, it means that yes, the economy is generally headed in the right direction because money is in circulation. Now, this is a good gauge of looking at inflation, but once again, too much of inflation is not good. This ties in with the mandate of a central bank, because the mandate of a central bank is essentially two main mandates. The first one is to ensure that they do have full employment, whereby they want as many people in the workforce as possible. The second mandate that the central banks usually do have is to maintain inflation between the 2 and 3%. Now, low inflation is not good because it means that money necessarily is not moving in an economy. While on the other hand, high inflation is also not good because it means prices of goods and services could be out of reach for most of the people. So the purpose of a central bank, they will look at this data. For us traders, we also want to look at this data. Why? Because the biggest participants in the financial markets are whom? The central banks. So if the central banks are going to be looking at this data, then yes, it means that me as a trader, I would also want to look at this data because it's going to show me where the markets could be headed to in the near future. Now, once again, in August of 2025, the Swiss Harmonized Index of Consumer Price Index stood at 107.91 points. This corresponds to a rate of change of negative 0.1% compared with the previous month and 0.0 compared with the same month of the previous year. Now, the HICP is a supplementary indicator for inflation based on a harmonized method across European Union member countries. It enables inflation in Switzerland to be compared with that of other European countries. Now, when you look at Europe, it's a very interesting region whereby there's usually a lot of cohesion. Whenever one person does business, there's a high likelihood the other person is going to benefit as a result. Why? Because they are positively correlated. Let's say, for example, Europe do produce a lot of goods. When you look at Germany, when you look at Italy, when you look at France, they do produce really, really good machinery. Let's say, for example, Lamborghini, Ferraris, when you look at Rolls-Royce, and these products have to be sold. So if you look at it, who are the biggest consumers? Let's say, for example, the United States of America. So if these products are being made in that particular country and then they're being sold, it means that people in that country will be paid better. If they're being paid better, it means they're going to pay much better taxes. It means that they're going to spend that money. Now, this is going to have an effect on the economy that we are seeing currently at the moment. And if the data does come out negative, like what we are seeing currently at the moment. We're seeing, okay, maybe consumers are not buying as much as possible, and this could be as a result of the tariffs that have been enacted across major countries. Now, there was a news release just recently whereby it was discover that maybe the tariffs could be illegal, but they were a good negotiation tool to bring people into the table, whereby Mr. Donald J. Trump would want to have a slice of the cake because, once again, the United States of America are the biggest consumers of the product. So, looking at the data, we can say that CPI did fall slightly to the downside, which is good for the economy, but also it's bad for currency. Okay, meaning they are going to get much cheaper prices for food and services. But once again, if they're getting lesser prices, it means it's going to affect the farmers. Let's say, for example, if I was to sell tomatoes and prices of tomatoes, let's say, was at 10 shillings. If inflation goes down, let's say, for example, the tomatoes are being sold at 5 shillings. For you as the consumer, it's going to be good. Yeah. But what about the farmer? Will the farmer want to plant tomatoes next year? So it's going to impact them. It's good for the consumers, but it's bad for currency. Now, this is once again the purpose of a central bank, to ensure that there is balance between the consumers and investors. Okay. Now, looking at it currently at the moment, going back to the economic calendar, that was data that was just released at 9:30 a.m. today. In the next an hour, 44 minutes, as per the time of recording, we do anticipate retail sales for the euros, whereby the previous number was 3.1%. We are anticipating a consensus of 2.4%. The actual data has not yet come out. Now, once again, retail sales data, which is released by Eurostat on a monthly basis, does measure the volume of retail sales in the Eurozone. It shows the performance of the retail sector in the short term, which accounts for around 5% of the total value added of the Eurozone economies. Retail sales data is widely followed as an indicator of consumer spending. Once again, consumer spending accounts for a majority of overall economic activity. Now, the percentage changes reflected the rate of changes in such sales, with the year-on-year reading comparing sales volume in reference month with the same month a year earlier. So if you do see a Y on Y on your release, this means it's a year-on-year release. If you see an M on M, this is a month-on-month release. If you see a Q on Q, this is a quarterly release. Now, once again, for you as a trader, why is this important? A high reading is usually seen as bullish for the euro, while a low reading is usually seen as bearish. Now, later on, in the next 2 hours, 12 minutes, we do have ECB simple loan speech. Now, this comes at a critical time because yesterday we did have President Lagarde releasing her second speech this week. And on Monday, she did mention about, one, the Fed's independence and the implications that the markets could have if Donald J. Trump does mess around with the independence of the Federal Reserve, whereby it could shake trade balance all around the world. Now, the other thing she did mention was the political instability in France currently at the moment. On 8th of this month, France are going to have their popular vote, whereby if the current regime doesn't get the upper hand, they are going to dissolve the parliament, which is going to have an impact on the currency, because investors would want to sell off their treasuries and bonds. And she had this concern of, if that does happen, it's going to impact the euro, because once again, when you look at France do account for almost more than 20% of the total GDP of euro. So whatever happens to France is going to have a ripple effect on euro. Now, yesterday when she was talking, her concern was the European Union should close loopholes in stablecoin regulation. And these were some of the things that she did note, whereby European legislation should ensure that such schemes cannot operate in the European Union unless supported by robust equivalent regimes in other jurisdictions and safeguards relating to the transfer of assets between EU and non-EU entities. This also highlights why international cooperation is indispensable. Without a level of global playing field, risks will always seek the path of least resistance. Now, she did mention about stable coins do need to have a reserve, so that whenever anything happens in the market, let's say, for example, institutions buy Bitcoin without any reserves backing it up. So whenever they do withdraw their reserves without any backing, it's going to have an implication on the specific economy. Now, only the euro issued by our ECB's legal tender, and this must be made very clear to all citizens, said Connelly, a commissioner at Italy's market watchdog. Once again, you see, at the end of the day, the fiat currency is the most important thing in an economy, because if the currency is weak, it means everything else is going to have a ripple effect. And it's the mandate of the central bank to ensure that the economy, the currency, the fiat paper, that piece of paper that makes the world go round, does make the world go round. Now, afterwards, the economic calendar, going back to the economic calendar, we do have ADP employment change, whereby we do anticipate the numbers coming out lesser at 65,000 compared to the previous number at 104,000. Now, this could be very interesting, because looking at the job markets in the United States of America over the past 2 months has been really worrying. And tomorrow we are due to anticipate non-farm payroll. All eyes shall be on the dollar, whereby how are the job markets looking like currently at the moment in the United States of America. If people are losing jobs, it means that the economy is going to be affected. If people are gaining jobs, it means also the economy is going to be affected, which is important to us traders, because it enables us to find probabilities, to find opportunities in the marketplace once again. So we shall be looking at the data, and I'll be here to digest the data with you. Once again, if you are going to be around Nairobi, we shall be at the Nairobi Garage, Spring Valley, tomorrow from 2 p.m. to 4:30 p.m., whereby we are going to dissect the data as it comes out. Now, the day is going to conclude with ISM PMI, which is the Purchasing Managers Index, whereby they look at these companies. You see, for example, the United States, they use usually manufacturing PMI, and then there's the services PMI. Now, there's a lot of consultancy that happens in the United States region. Now, this data is going to look at, okay, how do you feel? They are going to ask these people, the consultants who are offering services, how do you feel about the relative level of business currently at the moment? Do you guys have new orders? How do you feel about employment? Are you guys hiring currently at the moment? What do you feel about the general markets at the moment? Now, the PMI is one leading indicator. So these, with the news releases, we do have two sets of data. There's what you call lagging data. There's what you call leading data. So PMI is usually leading data. Why? Because businesses usually react to changing market conditions, usually are the first people. So if, let's say, for example, anything happens to the economy, businesses are usually the first people to be impacted. Now, when you're reading this data, a data above 50 indicates that the economy is generally expanding. Now, when you look at the data below 50, it means that the economy is generally contracting. Now, once again, a data above 50 indicates that it's going to be bullish for the dollar. A data below 50 indicates that the services sector activity is generally declining, which is seen as bearish for the United States dollar. So that's going to be for the economic calendar. We want to switch gears to the charts. And if you have any asset that you would want me to look at, kindly put it in the chat box. I'll be glad to answer it, because I do have a lot of pairs on my chart and I cannot look at each and every one of them. But currently, looking at the stock heat map, Google is up 9.14% on the day. Apple is up 3.81%. Avco is up. We do have Tesla up 1.44%. Nvidia and Microsoft currently are around the market opening price. Quite interesting to note how this data is going to play out before the non-farm payroll release. Now, moving over to gold, this is what has been the talk of the town for the past few trading days, whereby we have seen gold move, and whenever gold moves, it does move. We have seen gold gain almost 7.94% in less than 14 days, which is quite interesting, coming from $3,315 an ounce to $3,578 an ounce. Now, looking at Asian session today, we did have a slight correction, whereby the markets did move to the downside, and this is a very interesting piece of price action, whereby this candlestick broke the most recent lows, which was yesterday's Asian low, but closed above, and then the market started printing side by side. We did have this massive candlestick, this bullish candlestick, which was exactly at 9 a.m., which corresponds to German Open or Frankfurt Open, if you can call it. Now, currently at the moment, we are in London Open, and we want to see how the markets are going to fare before the day does close. Remember, once again, tomorrow is going to be non-farm payroll, meaning the markets could be very volatile today. As a trader, risk management is very crucial. Always ensure that the goal number one of a trader is capital preservation amidst all of these volatility in the markets. It means there are so many opportunities for you to execute on the markets. So calculating risk management could ensure that you stay in the game for longer. But looking at gold at the moment, anything can happen, especially looking at the data once again that will come out tomorrow is going to depict where gold will be headed to. Now, I want to switch gears slightly to this website of the CME, whereby ever since the month did begin, actually ever since last month, this data was around 80 something percent. Currently, at the moment, there's almost 100% certainty that we might see interest rate cuts in the next 13 days, 10 hours and counting, whereby there's a 97.6% chance that we might see interest rate cuts being taken down to 400 and 425 basis points. Now, that is very interesting. Could this be a factor of why gold is buying? Totally, totally. Looking at by the end of December this year, there's a 47.7% chance that we might see actually two interest rate cuts being taken down to 375 and 400 basis points, while also there's a 42.6% chance that we might see interest rate cuts being taken further down to 350 to 375 basis points. Quite interesting to note. Could this be the reason why the markets are already starting to price in? Because once again, if the Federal Reserve are going to lower interest rates, it means that they're generally weakening the economy to stimulate it. Basically, they're advocating for these companies, go take out loans. Loans are going to be cheaper. When you look at the United States dollar, they do have a 37 trillion debt. Now, if they do lower rates, it means that they are going to pay off their loans at a much cheaper price. Now, looking at anything against the dollar currently, apart from today's Asian session, we did see the markets rally to the downside, but once again, very interesting piece of price action. Looking at silver, almost similar occurrence to gold, whereby this candlestick broke to the downside, closed above the most recent region, which was Asian session yesterday, and currently the markets are retracing. Could this be a correction to the downside for a further continuation to the upper side? Looking at the dollar index did tank to the downside after tapping onto Tuesday's highs around 98.5. The markets did close aggressively, and this is some of the patterns that repeat itself. Now, looking at it on the dollar index, you can see how the markets did rally to the downside after grabbing liquidity on Tuesday's high of the day. This was around 3 p.m. This was just at New York Open. Now the markets are very interesting. Looking at it, how it delivers itself, very beautiful. Now looking at the fear and greed index, it has been playing around ever since the week did begin. Looking at Monday, we did see a gap to the upper side. Now the markets are currently retracing, going back down to 16.29, meaning volatility is still anticipated in the markets. Now looking at equities, which are US 500, NASDAQ, US 30, and the Russell, you can see all the assets currently at the moment are ranging, and this is very much anticipated because these companies, the index, the stocks are going to wait for the data to come out tomorrow. If it does come out negative, it means that once again, when you're looking at non-farm payroll, it's looking at how many jobs were created in the previous month. Now, where are these jobs being created? They're being created in these companies. So if the job creation is going to be higher, it means that companies like Nvidia, companies like Apple, when you look at the stock heat map, these are the companies in the S&P 500. If I click here and then switch over to the Nasdaq, these are the companies in the Nasdaq. So if these companies are hiring, it means that business is headed in the right direction. Now if they are not hiring, it means that okay, profits are not as much to justify employment, and you do anticipate this to have an impact on the charts as time goes by. Now looking at Brent oil did retrace back into the $66 a barrel. Quite interesting, looking at how we did break out of this consolidation that was persistent for quite some few days. Then the markets are currently retracing back into that region. I would want to see how the markets are going to fare on, especially after the news release that is going to come out tomorrow. Now I would want to leave it at that. If there are any assets that someone wants me to look at, Karen, I shall be glad to Look at it. Thank you, Dukala Shoes, for being the first one to join in. Niaje SK, what do you think of XAUSD? Currently, at the moment, there's only one way to find out. It's going to be dependent on the data that's going to come out tomorrow, but currently, looking at the trend is to the upper side. Thank you, Infinity, for the follow. Thank you, Jerry, for the follow. Mr. Rashidi, do you think XAUSD will make new highs? Currently, yesterday did make an all-time high. Yeah? So gold prices have never been at 35.80. So yesterday we tapped into 35.80. So the high was 35.78 to be exact. So this was the highs that was created yesterday. We have never, we have never been on those territories. Okay, that's going to be it for me. Once again, take care of yourselves. If you are going to be around Nairobi, we shall be at the Nairobi Garage, Spring Valley from 2 to 4, whereby we are going to have a lot planned out for you. Once again, take care of yourselves. Risk management is going to be very crucial as you head on to the closing day, which is going to be tomorrow, the final trading day of the week, which is going to be very active, whereby we do anticipate non-farm payroll. Take care of yourselves. May God protect you. May your enemies respect you. May death neglect you and your families.